First of all, it's an amazing achievement that he was able to withdraw 2.5 million from a profit loan, and it also tells you that it's possible.
That's a dream of every trader, and seeing someone actually achieve it.
Everybody has the same opportunity. So anybody walking into the trading space has the same opportunity as Jade Cap, who made the $2.5 million withdrawal.
The first trade that made him 22 grand on $27 move on gold is a sniper. Yeah, if you would connect Dimitri with his exit strategy and Michael Blue with his entry strategy,
It's funny, like mutating the two traders together. Can you imagine doing that?
yeah, that would be actually fun. It was an experiment where they put people who didn't approach trading or didn't trade at all, and they gave him the strategy, the turtle strategy, and they were trying to test if they are going to succeed. And they did succeed because they were following the trading plan of the turtle strategy.
So there's a trader called JCap who has made $2.5 million.
Oh yeah.
Last week on Apex. I think, first of all, it's an amazing achievement that he was able to withdraw 2.5 million from a profit loan, and it also tells you that it's possible. I think it opens up so many doors on that. There is a potential to completely change your life with prop firms.
Yeah, becoming a millionaire in trading, and that's a dream of every trader, I would say.
Right?
Yeah, and seeing someone actually achieve it, not one person, because actually, from what I know,
Yeah.
there were 4 or 5 people who in a it was last week, but I think they have been training it in the last 3 months, so it wasn't in a period of last 3 months. Get 2.5, 2 or 3 millions in payout. So I think in total 15 millions in payouts in the past 3 months.
There was
2 months.
There was a trader, sort of the first big withdrawal I saw was from FTMO. Do you remember when it was? It was 2022.
For the first trader.
The first trader that did 500k, and they did a video with him.
Yeah, the interview.
Yeah. Do you remember seeing that?
Yeah, I think so. Yeah.
That was the first time that I thought, okay, wow, something is really changing in this space. Everything went quiet. No one really was matching that. Yeah, I think it was 500k. The biggest one was 100k from Lambo Raw. That was the biggest one I saw first. And then it was another trader that did 500k. And then I think FTMO did the biggest one, which was $1.1 million.
Okay.
And then now,
Yeah, it's possible.
2025, 2.5 million.
Yeah, it's growing.
Yeah, it is. So it's growing next then?
Yeah, I don't know, maybe even more than that. It's really interesting how it, and at the first, no one's really actually believed it. Like, when I saw $500,000, I didn't really believe it. But right now, as what I hear within the company, within the industry, what news that I get, I truly believe that it's growing really fast. And 2.5 million, that's a lot of money. I haven't speak to a trader who would have made that much. I don't know.
On a personal?
Yeah, on a personal level. I've seen traders achieve like really great amount in payouts, but this is something on a completely different level. Yeah, it's only underline the doors that are open for every trader. I mean, of course, those are traders who have been trading for a long time. I mean, they did not do it in 3 months. Like, started trading in January, and then 3 months later, 2.5 million in profit. But yeah, it's amazing, and it amazes me where this industry is heading to. Those payouts.
I love that everybody has the same opportunity. So anybody walking into the trading space, the prop firm space, has the same opportunity as Jade Cap, who made the $2.5 million withdrawal. There is no cap between, yes, you're going to get this payout because you're this person, or you're going to get this payout because you're that. No, everybody gets the exact same, and that is amazing. It just shows that when you are able to get your discipline under control, you're over-risking, you're over-trading, all of these things that stop you from actually making big achievements, you can potentially hit these goals. Yeah. I mean, we're going to touch on some of these during the podcast.
Yeah, most definitely. We're going to speak about tips that we can give you from the accounts and traders that we have reviewed. and also interviewed. So we will provide you with some tips. We don't have any tips from traders like JadeFX, but we've got also at the markets really good traders. And I think that these traders who have actually achieved those big payouts, those weren't actually gamblers, because you can't really gamble or have that much luck to gamble on few positions, like 2.5 millions. You need to do it consistently. So I don't think that that was a cable that, at least to me, from what I know, and JadeFX is on, or at least in the trading industry for a long time, I think is a dedicated trader who trades really good, and he's doing it in the long time. So yeah, we're going to talk about traders that are very successful within the market. I'm going to outline some tips. Also, we will discuss them because we both trading for more than a decade, each of us. So we've got some of our own experience and expertise that we can pass on, and we'll just try to get into or dive deep into each topic that we have prepared for you from those accounts reviews, from those interviews.
Yeah, I mean, we've got traders in EA markets that we're able to see, and you've done 100 interviews with traders.
Yeah, this year at least 100 interviews.
Yeah, so you've got a lot of knowledge from these amazing traders. So JCap is one example of a trader from another firm. I'm glad that we can now give other examples of traders within E8 markets. Hopefully you guys can learn from the things that they're doing.
Yeah.
And again, our input as well. I've been trading for a while. You've been trading for a while.
Yeah, exactly.
We can give some advice.
Yeah.
So
We can dive in. What I would like to mention before is that we are doing most of this podcast for dedicated traders, for traders who are thinking in the long run. Like the traders we have interviewed and reviewed. Mika, Peter, I had an interview a long time ago, and we would like you to be a dedicated trader because your possibilities within the prop firms grows as you grow as a trader. And if you gamble it, is one way to make money, right? You can make money without, as you said, being successful in the long run. But this podcast is mostly for those dedicated traders. Let's kick off with, I would say, overtrading. How about that?
wow,
Overtrade, most definitely.
have I ever
Yeah.
traded? It's something. Overtrading is something that I think of as I want results now, so I'm gonna enter a trade because I need those results now. That's my belief. I have to trade in order to make money because I'm not gonna hit my goal. But in reality, it's let me be patient, pick the right trade, and that's probably gonna put me more towards my goal than as if I would just farm out trades for the sake of it.
Yeah, I think overtrading is very dangerous. And I was speaking about Petter, that I did interview with. It's a German trader who's trading with the markets, the same fronted account for like 13, 14 months. And he's a very dedicated trader. He's really good. And what he did is that he did his own research on decision making. We're speaking about this, but basically he studied all the studies and all the examples from different universities and centers. And what he found out is that the human being can make two really good decisions, and the other decisions are declining rapidly. So basically, in one day, you have two decisions that you can make, and it will be great decisions. So if you're opening, he also had this sort of a rule that he doesn't open the third position on a day, because the third decision might not be as good as the previous two.
That makes a lot of sense.
Yeah.
That really makes a lot of sense because, I mean, the first, you attach emotions to these trades, and if it's a negative emotion, again, this is a decision that you've made. But if it's a negative emotion, then you're going to have to kind of overcome that, and then go to the next trade and overcome that positive or negative emotion.
Yeah.
And then third, fourth, fifth, sixth, seventh, throughout the day.
Exactly.
It's crazy, and it's very tiring on the brain.
Also very tiring. That's why I believe that banks are first institution that came up with algorithmic trading, right? And I think that they made it because traders are not capable of doing that many decisions throughout the day. Most algorithmic trading is scalping, right? And if you have a scalper trader, I know a few scalpers who are mostly in Asia, invented algorithms, but trading themselves. But still, the algorithm has bigger probability because if you're opening 2, 3, 4, 5, even 7 trades per day, your decision making becoming worse and worse with every decision. So
because you're getting tired, right?
yeah, because that's why you're being replaced by the algorithm. That makes actually sense. So for intraday traders who do 1 or 2 trades per day, it's good. If you really want to be a scalper or do, 5, 7 intraday trades on 5 different instruments, I think it's impossible to actually. I was trying that at early days when I was started trading. I was trading multiple assets, multiple instruments, and I've never been successful this way. So I think, and also since I've turned into long-term trader, I've become more successful. And I'm taking decision once a week, make open a position once a week, holding for 3 months. And this strategy works for me perfectly. So I think this also plays a pivotal role. And if we review all those accounts that we reviewed, with Dimitri, with Michael B, and others that are going to be published soon, there are gaps of even 12, 14 days between the trader's trading history. So the trader was trading on 12th of March, and then he took a pause till 26th of March. Like half of a month, trading.
That was Dimitri, wasn't it?
I think Michael V. I think Michael V because he get the payout of $70,000. And
I've got a question. What do you think is overtrading? Because some traders will be scalping. That is their strategy, and they're successful at opening multiple trades rather than opening less frequent trades.
Yeah.
What do you think is a suitable amount of trades a day? I know there's no golden number of you have to trade 5 trades and you will be successful. But I think my opinion is that you have to work out yourself through the data of your trades. What is the perfect point of you shouldn't go over and you shouldn't go under? What do you think?
Like in the amount of trades.
Yeah.
I think the two makes perfect sense.
Yeah.
Even the last review that we published, the Michael V, he does 1 trade per day.
Yeah.
He doesn't trade every day, but when he trades, he just opens 1 trade till the gold.
Yeah.
And sometimes 2, but it's barely. So I think 1 or 2 decisions, and with the Peter psychology research, it actually makes a lot of sense. And I know traders who become more profitable once they actually start taking less trades.
Yeah.
You still have to watch the charts. This is how you get the expertise to watching charts, but no one forces you to enter the trades, so you can just gain the experience. You will figure out how the market flow works. You get a lot of experience by just watching the chart. You don't have to trade it.
And on that, actually, I watched the charts for years and years and years. So I have good experience of understanding how many moves there are in a day. There's 2 sessions for us in the UK and 1 sort of, I guess you could trade Asian session in America. But there's only really 1 movement, 1 or maybe 2 you can squeeze out of the London session, and then 2 that you can squeeze out of the. So really, you're looking for the 1 move in the US session. And then once those 2 moves are done, there's something called the average daily range, which is being fulfilled. The markets can't then move statistically any more than what the ADR is.
Yeah.
So I would always, it makes perfect sense. You have a trade in London and you have a trade in New York to make up the ADR for that day.
Yeah.
So to be in and out, trying to pick every single movement, it's
good most of the time. Yeah, exactly. And mentioning the London session is what I've heard most of the time, that people are waiting for a London session and they have certain scenario that needs to happen in order for them to enter the market. I mean, Ken, who does the fundamental analysis for us, he also traded this strategy. He's got 2 or 3 strategies, but this is one of them. And he waits for certain scenario to happen in London session. If that's not going to happen, I'm not going to enter the trade. If yes, then I'm going to enter. This is a good approach to have, like the trading plan, which we'll get into. But also, in order to not open too many positions, you should have some sort of a trading plan, criteria, list of it, and then go mark 1 by 1, and if you mark all of them, you enter.
Yeah.
Right? This is not going to happen most of the time in the market. If you have really think through the trading plan.
Yeah.
Yeah.
Trading plan. So going back to the point of how many trades you should trade a day, it's about creating the trading plan.
Yeah, exactly. It depends on strategy also, right?
Yeah, your optimal could be 4, your optimal could be 2. But once you have that trading plan and I shouldn't go over this because after 4 trades, I'm tired, I'm mentally not quite there focused on what I need to be focused on.
Yeah.
you can make that plan that's effective and not just written down piece of paper. I'm writing down this list because this is what I think is going to make me better. No, it's proven this is going to make me better because I have the statistics.
Yeah, exactly. So that's over trading. Very dangerous. And I think if you want to know more about the decision making, you can watch the entire interview with Peter, which is on our YouTube, because this is connected to the second, which is patience and FOMO. Again, two very common factors that I have seen when reviewing accounts of either successful traders or traders who have failed the evaluation. The FOMO, fear of missing out, missing the opportunity, it's pretty clear.
Yeah.
And also very dangerous and patient, like waiting for the position there. We were actually talking about like not overtrading, like waiting for the criteria to be met, right?
FOMO is a really interesting one because I believe it comes from impatience.
Yeah.
And it comes from wanting to be somewhere where you're not currently and you're forcing to get to that place. So if I want a $2.5 million payout like JCap,
Yeah.
and the market is not giving me exactly what I want to give me, or it's already gone because I missed the move, I was out, me rushing in and losing money because I wanted to get in, because I want to achieve that goal of 2.5 million. It sounds so simple.
Yeah. It is actually.
But not doing that, not rushing in. When you think
Just take the time.
trading is so frustrating because when you say it rationally, when you talk about it rationally, you think, why would I do that?
Yeah.
Why would I rush into a position just because I think that is going to get me closer to my goal?
Yeah, and most of the traders for some reason think that actually what you just said, that they buy or purchase an evaluation and they just looking at the fastest way to get funded stage and then the fastest way to get the payout.
Yeah.
But actually that's where most of the traders actually fail.
Yeah.
Because from the statistics, if the trader purchased the evaluation and traded on the first day, on the very day that he purchased the evaluation, they tend to lose the evaluation. But up in the same day, but in the week or 2 weeks after.
Okay. So explain that again.
Yeah, you purchase an evaluation.
Yeah.
And if you start trading in right away,
Yeah.
because you purchase an evaluation with, or most of the beginners, with a clear goal in mind, like I'm going to pass as soon as possible.
Yeah.
I'm going to be funded as soon as possible.
Yeah.
So I think your brain is starting to look for positions or opportunities which are not in the market. And if you open it and you get your first position into loss, then psychologically you're devastated.
Yeah.
Because most of the traders struggle when they get into the drawdown.
Yeah.
Like they're under the break even of the initial balance and they're chasing the losers, they make it even worse. And this way, you actually fail the evaluation way faster.
That's so interesting.
And most of them are buying it on Monday because starting new week, right? And Monday, there's not even volatility. About some traders, I need to be in the market. I need to figure out if
It's that one, I have to be in the market to be achieving my goal.
it's not maybe achieving the goal. It's maybe just I want to be there fast in the funded stage. I've heard those stories about 2.5 million in payouts. I want to be there.
Yeah, it's the dopamine rush of like, I'm going to do this now. I'm going to get it. I'm going to achieve it.
Yeah.
And that is the exact reason of why traders blow up. And you explaining the fact that when traders rush to get past or rush to get into the market after they've passed, they blow their account faster. And we're able to see these statistics. And that's what's beautiful. And you guys learn from the statistics that we get to talk to you guys about so that you can be better in your trading.
Yeah, exactly.
This is why we're doing what we're doing right now.
Podcast is actually very easy. Just give it a time. If you buy an evaluation on Monday, just give it a time. Wait for the opportunity. Wait for your trading plan to meet the criteria in the market, and then enter the position. I mean, like, do not rush it. It's most. At the very top of the list, the mistakes the trader made.
So this is making me think about the interview that we did 2 weeks ago with Jose, Mr. Master Sheep, Mr. Master Sheep Drew, who basically explains that the market teaches you lessons. And if you're able to learn from the lessons, then you're able to achieve your goals. Yeah. This is the perfect example of that. Yeah. If you're able to not rush and chill, be calm,
Exactly.
then the chances are that statistically, you are more statistically probable
Yeah.
to get a payout.
Yeah, exactly. Yeah.
So learn from your mistakes. Learn
Exactly.
from your mistakes.
Exactly. Yeah, that's probably the FOMO and patient in one lesson. Like give it a time. I don't think that there's much of it for at least these two. And as we were mentioning before, most of the successful traders they have big gaps in between the days they take the trades. So yeah, you need the space. You need 2 days to take off.
So what would you suggest then? Looking at the statistics, what would you suggest of the correct day? So when I've always got a funded account, that's been the first thing I did. I'm like, yeah, just get me into the markets. I want to make money now.
Yeah. Now there's a lot of things you can do outside trading. You can just watch the market and hopefully learn how the market behaves in certain situation. Like, uh, it moves in certain patterns, I would say also sometimes. So you can learn the patterns, the flow of the market, especially if you're trading one instrument, which we'll get into in a little while. And then you can also learn outside the market. You've got a lot of activities you can do. Because if you want to be really successful, I don't think that you should stop learning once you have a strategy that is kind of profitable. You can't stop learning. So yeah, you should be doing anything else than just trade at the very day you purchase the ovulation.
I think it's very difficult to not consistently learn because the market consistently
Presents opportunities.
yeah, it presents opportunities, but also it's forever developing. It's forever
Oh, yeah.
like the circumstances this last year can be very different to this year. And we've seen that with the craziness that Trump's doing right now.
Oh, yeah.
Traders have to adapt to that. And you have to adapt to the volatility that you're getting and learn from the volatility. Traders that have never experienced a crash or never experienced high volatility
Yeah.
now are learning about themselves. Oh, what do I trade like in this high volatile times?
Yeah. That's completely true, and I agree with that. And before we actually move on to another tip that we have, I would like to remind you that traders exactly who trade price action or technical analysis or they have indicators, we basically have Ken, the guy who does fundamental talk for us, where basically he lets you know what's in the week ahead, the fundamentals, the most important economic data releases or central banks policy adjustments, anything from the fundamental analysis. He will just let you know. You don't have to trade it, just to be familiar with it, because you need to watch calendar. It's also one of the tips to watch a calendar, because economic news, data releases, they present a lot of volatility, and some traders most definitely ban on news trading. Like they wouldn't even tend to trade news, but they opened trade in a bad timing.
Yeah,
I
and
think it came out.
it's game over.
Yeah, it's getting over.
It's like when Pac-Man.
Yeah, exactly. It's not even like it's the rule at progress that you cannot trade the news 5 or 10 minutes after and before. And also the volatility is sometimes anything that market needs is the tweet from Trump, and it goes 100 pips on the USD.
Which is a good thing and a bad thing, because if you're in a long, then
Yeah,
you're gonna get paid.
yeah,
You're gonna get paid. I think part of why JCap actually did so well was because of the craziness that's happened.
maybe, yeah.
Volatility.
Someone can read as well.
Yeah. Someone, if you can read, and Ken does a fantastic job at reading the fundamentals.
Yeah.
And me editing his videos every single week has made me realize that he is fantastic, and they're very important as well.
They are. I'm mostly also fundamental trader, but I mean, some traders basically say that fundamental is not needed because you can read the chart. Basically, where something is happening, fundamental analysis tells you by the news, by the data. So I don't know, inflation just came up higher than was expected. Then the central bank is about to raise interest rates, so this creates a market momentum. But technical traders tend to like argument with you can see it in price action. So it's not as important for you guys to trade either technical or fundamental if you can read the news within the candlestick patterns. But you should be watching the economic calendar with Ken or alone, just to know where it's going to happen. Because whenever you trading price action and the patterns are going to happen, it's going to happen because the news. So you at least have a time where when it's going to happen. So yeah, that's what I just wanted to mention before we dive into. Actually, we talk about the Trump Twitter and moving 100 pips as the risk management menace. That's another tip.
you just sorry to go back to fundamentals.
Okay.
You're trading alongside things, right? So it's not just one thing that moves the markets. It's a bunch of different variables that move the markets. And learning in this industry is really, it's just, you cannot not continue learning. You cannot not continue understanding new things about the industry, about the business, about prop firms, how they work. Just what I say is just keep educating yourself.
Yeah. And the thing that or you are a technical trader and you master technical trading doesn't mean that you have to actually stop there. You can also learn fundamentals. You can add aspect to your strategy. Yes. I think anything you learn, you can use one day. So you shouldn't be stop learning as you just said it. Yeah.
I mean, a good example of that is obviously gold during this period of time. What I've learned from Ken's videos, watching them every single week, was that obviously gold is a safe haven and the dollar has previously been a safe haven, but isn't anymore because of what Trump's doing.
Yeah.
Now, understanding that tells you where's gold going to go. If everybody is putting their money into gold because it's the safe haven, it's going to go up. And if you're trading against gold, if you're selling gold with your strategy because you don't know this information, you're going to get burned.
Yeah, I mean, opportunities are all about informations, right? When the information is there, it means the opportunity if you know what's going to happen or if you at least informed about it. So, yeah, I completely agree with that. That they should be watching it. Nevertheless, they are fundamental, they not, right? It's additional information is always good because sometimes you can have bias from your, I don't know, analysis. If you're technical, you can have bearish bias, but then you can get news or information either from Ken or anything that you read on Bloomberg, and you don't have to be, you can't be basically just stick to your bias. You have to be open-minded because sometimes you need to evaluate the trade and reconsider positions. So yeah, most definitely agree with that.
What was this topic that we were talking about?
Yeah,
Because we were still kind of going on fundament.
Yeah, I just wanted to mention we were talking about before we were talking about patient and foremost. I don't know how we get into fundamentals.
I think fundamentals just trailed on.
Yeah, we were talking about the Trump and how he created this in 2016 on Twitter. He created a lot of moves. So I said,
Did he?
yeah, he did.
2016.
I think the last presidency.
Yeah.
Wasn't.
Yeah.
He was 2016, so if I'm not mistaken. Maybe I am. But basically, in those years, anything that he shared on Twitter actually reflected into the market. So everyone was, instead of Forex Factory and trading economics,
They were using
just driving news and
what a flex.
yeah.
Imagine your Twitter moving the global market.
Yes.
That's awesome.
Yeah,
Really, really awesome.
it is. And we need to do it again, right? Trump is again president, so yeah.
Maybe we should enter Trump's account and send some tweets off.
Would be better. Okay, let's move on to the risk management finally, maybe. Because I think that's also very important topic factor.
So I'm gonna take the unserious side and say 100 locks on Euro USD is the best way to go.
We discussed it, yeah. That's probably my nightmare, like me putting 100 lots on Euro USD with 50k accounts.
I feel like that is the biggest joke.
Yeah.
Just 100 locks. When someone loses a trade, 100 locks on Euro USD and everything's fine. It never works out that way, but
as I was saying from the very beginning, there are two types of the traders. You have the gamblers and you have the dedicated ones. And the gamblers usually doing it. It's still in making money. So, sometimes it's really rare because what they are counting on is to spend less money on evaluations that they basically get from the prop firm. So in most of the cases, it ends up spending more for actual evaluations than getting paid.
Yeah.
And they're basically just
seen that actually, and I saw that even before I was in the behind the scenes of the prop fund space, there was a guy that I met when I first started YouTube, and he was doing exactly that. So I don't think he was quite hedging it, but he would buy an evaluation, go like 50 lots or something crazy like that. But he made a 50k payout, but then also spent 50k
exactly
in challenges, and that's sort of the gambling side. I don't know why it's trailing into Like gambling is gambling, trading
Yeah.
is trading.
It is. Sometimes
It's different.
sometimes trade is just all about put it all on red.
Yeah.
Sometimes it's like casino.
And
Even for some traders, for some reason.
I've been in the point where I'm a trader who follows his plan and I know what I should be doing and what I should be doing, but still I have this urge to just sometimes go a bit rogue off of my plan and do it. And I've done it before and I've kicked myself at the end of the day because I did that.
Yeah. Like regret it. Yeah, most definitely. I burned many accounts when I was starting out. So was definitely once I had like a streak of winning positions.
Yeah.
Like 5 or 6 ones, then the 7th trade. I said, okay, yeah, I'm doing great. Let's put more lots into it. And then you regret it, right?
You accidentally slipped and put 50 lost rather than 5.
Yeah. On 10 grand account. Yeah. No. Like, oops. Yeah, I don't know why traders do it, because it's not for me. Trading is more like gambling, as I'm suggesting, like being or passing the evaluation in 2 or 3 trades. I mean, there are some rare examples of people who are doing it with a risk-reward ratio, a likely risk-reward ratio of 2.1. So they get $20,000 in payout while spend 10 grand on evaluations. I mean, those are really rare examples. So most of the people who are doing this are not successful. So yeah. That's gamble. So you need, back into the topic, we need the risk management. Or did you want to add something regarding that?
I mean, risk management is one of those.
That there's a lot of it in that I can talk in risk management, because
I just think everybody finds it very, very difficult to stay on that consistent risk management plan. I don't know what happens after you win a bunch of times or lose a bunch of times. You kind of just sort of get to the point where you're like, whatever, I'm just gonna go a little bit bigger on this trade. Or
I don't think you have to be disciplined enough to not doing that. I think it's already
discipline is it's a lot of
you should just be fixed on whatever you have set. Based on your strategy, based on your stop loss, you should calculate your lot size, as per Michael B did it, and then you should stick to it, like open on every position. And he even scaled his account from $400 to almost $600,000, and he still trades the same lot size on every position. So he opens one position per, I don't know, 3 days. It's still one instrument and still the same lot size. So I think this makes also things easier for you. If you have predefined lot size that you're going to open based on your stop loss, based on your strategy, then you don't have to like deal with it. You open the same lot size, and you still have to, whenever you're on a winning streak or losing streak and you want to chase the losses, you still need to be disciplined enough to say, no, I'm going to trade this lot size, because this is the only way how you can tell whenever you have win ratio of a profitable trader with your risk reward ratio. So yeah, you need to keep with it. Whatever.
I also believe that your risk tolerance can go up and down. You can move. I wouldn't say your risk to reward ratio, but if you let's say you trade a 2-to-1 risk to reward ratio normally, and then you get to the markets late, and then you see that your trade is still valid, and now if you had entered earlier, you had a 2-to-1. Now, if you entered later, it was a 4-to-1.
Okay.
This is the opportunity where you can really capitalize on these trades and make small trades bigger. Yeah, because you're still risking the same amount, but you've got a better entry in the markets.
Yeah, that could be a thing. Yeah.
I think that's where you grow your account. I think that's really where you separate yourself from the normal average to the experts, of where you're able to really maximize using the best possible risk and still keeping it within your risk appetite.
Yeah.
But maximizing that.
Yeah, the risk appetite should be default, like should have one, because you still should risk whatever you are risking at the very start. Yes, you should not be like adding to that. But to have high risk reward ratio, I've got nothing against it. Do you mean just to let it run as long as there's more into
Potentially, yeah. Potentially, if you see the market going up further, more so I see it as, normally if you're trading a 2-to-1 and you suddenly see a 4-to-1 and the trade's still valid, then you can enter it as if it was a 2-to-1. But
yeah, that's also a possibility. It's a very controversial topic, because some traders, I mean, most of the traders agree upon stop loss are inevitable. You need to have them. But take profits, that's a different thing, because I'll say that it limits your profit, your potential profit, and some say you need it because, let's say, you step out of the charts and then you would reach the take profit, but you didn't have the order there, and the market turned back. You ended up in break even. So it depends on the strategy, I would say. But yeah, bigger risk reward ratio in the run is also a good idea how to grow more, at least with your account. Let run. But then also there's the side of it, like where to stop being greedy, because some traders then don't know where to stop, and the market can reverse very quickly, and then you back on a break even at the best scenario. You can also end up in losing trade. So find the perfect balance between being greedy and let it run is also hard to tell. I mean, one of the really best exit strategies, the Dimitri, he on every trade almost, like in the range of 1 to 10 pips before the market reversed, he closed the trade.
Yeah, wow.
It was the first comment on YouTube on this specific account review that his precise exit strategy is something incredible. Yeah, this is also one of the tips. Now plan on your entries, but also your exits. So you need to have some also criteria when you're going to exit the trade, to not be greedy, also to not close early, to let it run as long as there's momentum. So yeah, that's another factor that you should, as a trader, think about to know where to close the position.
I think when you get confidence in your trade, like for example, Dimitri, who has a good track record of where the market's going to reverse, where his entries are.
Yeah.
I think that once you get that confidence, then you can, if it is within your plan, you can start to increase the risk appetite. If you are proving to yourself and you have the confidence that you can indeed risk a little bit more in these trades.
Yeah, exactly.
So Michael V he only sticks to one risk reward. He hasn't upped it. He hasn't.
No, he opens the same lots every time.
Wow.
The same instrument, because this is what we're going to talk right after, in tradable instruments, but the same instruments, which is gold, and then the same lot size and the same stop loss all the time. The take profit is a little bit different.
It's repetition, isn't it?
Yeah,
It's repetition.
yeah, but the stop loss is most of the time the same.
Did you get to see how many pips the stop loss was?
It was tight. He's trading 15 minutes time for the 15 minutes per day. OS. He basically had this trade. It was $27 move on the gold. He made $22,000 on it with $15 stop loss. I mean $50 move on gold stop loss.
What was his lot size?
10 lots. Yeah, he trades 10 lots every time.
Wow.
Yeah,
Dimitri or Michael V?
Michael V.
He trades 10 lots every single time.
On his 400k account.
He's scaled his account to 600k.
Yeah.
How many payouts has he got?
$130,000, I think, and his total profit was $170,000. So he's very close to $600,000, and every trade is on code, and every trade is 10 lots. So same lot size.
He's a killer.
Yeah, he just have the strategy. He just watches his trading plan, and whenever he sees the opportunity on gold, he enters, and he doesn't really care about lot size because he's got a default set.
He's a sniper.
Yeah, he is sniper, and also the entries. Oh my days! It's in the account review. The first trade that made him, or the recent trade that made him 22 grand on $27 move on gold. The entry was like 2 pips. I mean, if you would connect Dimitri and with his exit strategy and Michael with his entry strategy,
It's funny, like mutating the two traders together. Can you imagine doing that?
yeah, that would be actually fun. Like letting Michael V to open the trade and letting Dimitri to close it.
Wow. Wow.
Yeah.
Wow. It's funny because it was a comment on Michael V's account that said, I love comments, by the way.
Yeah.
But that said 10 lots are like, oh my God, he's opening 10 lots per trade. But when you really dive into the details of the lot size that he's doing, he's able to do that.
Yeah, because it's
Not crazy.
You've got small stop loss. At the same time, he's trading 600k. So 10 lots, it's based on his risk reward and based on his stop loss. It's not really a lot, I would say. 15 pips stop losses is almost nothing. So yeah, it's a scalping strategy most definitely. So yeah. But you should have, whatever you are going to trade 10 lots or less, you should have this defined just before you enter the trade, the first trade, because your continuous trades should have the same lot size. You should not like assign lot size to the opportunity or how much you believe.
I thought a lot of traders do. Yeah, and
Everyone does what everyone did it at a certain point. It's just saying, okay, I'm very sure about this trade. Yeah, I'm going to do, as we discussed earlier, I'm going to do 20 lots on this one because I strongly believe my bias is correct. And the market's going to do that. And 5 pips later, you
realize that. Yeah, the markets tend to humble you very quickly.
Yeah.
When you decide to put 20 lots on because you feel that like you're right.
Exactly.
It's Master Shifu, as Jose would say.
Yeah, he was right. He was completely right.
Yeah.
And the last tip, which I think corresponds to all the previous tips, is have a trading plan. Because with anything, with risk management, with instrument selection, we actually skipped one, which is the instrument selection. I'm so sorry about this. So yeah, most of the accounts that I've reviewed have actually only 1 or 3 instruments in volume analysis. So traders, like we just mentioned, Dimitri, Mycopy, and others, Mika, Peter from Germany, they trade 1, 2, 3 instruments. I think that is big advantage. I don't know where your beginnings, but my beginnings was that I had the watch list of like 30 assets. Yeah, and just
free them every
good mark on my on my favorite one, but I still had like 10 that I watched the entire time, and I was also trying to learn fundamental analysis. So I was trading pairs where was actually volatility from economic data. So I had like 10, and for I saw at traders who trade evaluation to the market, they tend to open more currency pairs or more indexes or combine it with also commodities and crypto on the weekend. And this is really wrong because most of the successful traders, they trade 1 to 3 currency pairs, most of them gold. And I would advise gold to any beginner because with the gold, it's a trending market. Last couple of years, it goes on the up. So you just need to find a place when you enter into the uptrend. If you're not scalper right, and you've got some correction, you've got some sideways trends. But gold is really good example of where should you begin as a beginner trader. And I think, trading one.
That's simple. Gold is. I mean, at the moment, it's just buy. Just buy it, and you'll be profitable. I remember when I first started. Actually, it was a similar sort of situation because GBP USD was uptrending, and I'd asked my dad to lend me some money to trade, and I think I flipped it from 250 to like 700, and all I was doing was buying GBP USD and thinking, guys, I've cracked it. Like, a millionaire's pending. And then as soon as GBP USD reversed, I blew the entire account.
We've got similar stories. The same happened to me because pound, maybe at the same time we started trading, and I was trading Japanese yen, and I had $2,000 in my account, also from family, and I was buying pound, and at the same time George was sitting next to me. We all know George, and that's how he got into trading. We were at a coffee shop, and we were just looking at the positions that it is possible to make money on it. And sometimes the easiest strategy was actually just buying the trend that I was doing for the first time, and I get to indicators, I get to fundamental analysis, and I was profitable as I was keeping it simple. But then,
so as soon as you complicated it, I just want to say one thing: thank God for families because they are giving every first trader their money, to experiment in the industry and blow their money basically.
I rolled the account like 6 months after, so yes.
It's so funny. I love that. It's also Josh. We interviewed Josh, and Josh said the same thing. His dad gave him $50, and whatever, he blew it up. My dad was 250. Yours was 2K.
And unfortunately, it blew it up.
Everybody else's is probably the same.
Probably everyone. Most of the traders had the same beginnings. Like at least 10 years ago when we all started, it was literally the same for every trader. Like deposit the money there weren't any problems back then. So your only choice was just to deposit a broker account and trade few bucks And if there was a broker who gave you some bonus to deposit, you were running to him, so you have as much capital as possible. But there was actually your only choice to go: your family money or your savings, if you was able to save some money. Yeah.
Mm. Mm.
So that's that. Literally forgot where we stopped, but with the instrument selection, I think we've discussed it.
Yes.
Just briefly. Just train 1 or 3 instruments. It's very easy and it gives you an advantage. And then returning back to having a trading
plan.
which is important because you can have trading plan for risk management, trading plan where you also write down your instrument. For all of the tips we just went through, you can create a trading plan for all of it.
Jake, I'm going to be really honest with you right now, and I don't know if I should say this.
Go ahead.
I have never in my life had a trading plan.
Really?
So after this podcast, maybe we should document you helping me create my very first, after I think I've been in the industry for 11 years, never had a trading.
I nearly succeed with the STML.
Maybe a trading plan.
Maybe exceptional. Maybe you don't actually.
Maybe I'm just a genius.
Or maybe that's it. No, I strongly believe that you should have a trade.
No, I agree. And I've done so many mistakes because I've never had a trading plan.
Yeah.
But there is so many benefits to having a trading plan.
I think so. You can write out anything, and just whenever you don't know how to plan the trade, you can just return it back to that piece of paper, and you've got all the notes, and you follow it directly. Like, I think that Michael V could have, like, on a paper, gold return 10 lots, and then 30 pips stop loss or 50. It doesn't want to be complicated.
Yeah, does it?
You just choose the instrument and then calculate the position size based on your stop loss. So if your strategy tells you you need to have 30 pips stop loss or 50, then you just, based on that, calculate the position. You go to my FX book, a free calculator, or there's a lot of calculators that basically calculate the position size for you, and you just write it down, and you're using the same thing all over again.
Yeah.
And then you need the trading plan for your strategy, so you can write down criteria or points, what market needs to do, or pattern that needs to repeat in order for you to enter a position. And if you see it in the market, because most of the traders are trading technical, which is basically just watching the patterns or looking for the patterns that repeat themselves and enter the position once you see there's a high possibility that the pattern will repeat. So if you just create the trading plan for that specific pattern, you mark every time that happens, and then you take a look at your position size. You just set the stop loss according it, and you're gonna trade. This is the simplest, and maybe
Can be complex.
yeah, doesn't have to be actually really complicated.
I mean, trading in general, I think you can either overcomplicate it or undercomplicate it, or just find perfect point.
Yeah,
And just like with a trading plan, it doesn't have to be over complex.
yeah, just need to find balance between it, as you do with your life and trading combined also. So yeah, that's a trading plan. Very important, I believe. At least it's also controversial topic like backtesting and forward testing. Like, some don't really believe in trading plan, but I mean, traders back in the day, they had trading plans, like the Turtle strategy. Have you heard about the Turtle strategy? Basically, it was experiment where they put people who didn't approach trading or didn't trade at all, never, and they gave him the strategy, the Turtle strategy, and they were trying to test if they are going to succeed. And they did succeed because they were following the trading plan of the Turtle strategy.
Wow.
Yeah.
Versus the traders that didn't have a trading plan but had it.
No, that they weren't. It wasn't versus. It was traders. It was just a bet between two pretty well-known traders, and the one was saying that he can teach someone who doesn't know nothing about trading to profitably trade, and that was the
Don't have a trading plan.
Yeah, and they just gave him the strategy and gave him the risk management, how much they should open on a position, and that was it. And they were actually successful at the very end of this project. So yeah, I think if very successful trader like FX would give you his trading plan, he would go like point by point exactly, following that, because you knew that trader has made 2.5 million in 3 months, or how long was it? 2 or 3 months?
I think it was about 50. I think it was 56 days, but let's just say 3 months.
Yes. So I think once you have a trading planner, you have certain advantage. And then I've got like tips, which is maintaining healthy lifestyle, which is having very common, and a lot of influencers, a lot of gurus speaks about this. So it's common knowledge among traders. Also proper trading environment, which is something that is also very, I would say, important.
That's interesting. Yeah. For me, I realized that trading is a very lonely, isolated
Yeah, that's true.
career. You can find community, which is very important. And
Sorry.
you remember the point.
Yeah, I remember the point. The community where we wanted to talk about, because that was also one of really, really big aspects or parts of my trading journey.
Yeah.
Community.
Yeah.
Since I started trading, I was trying to join any community that was out there, like for information, for just get into traders, to get tips, to get help, anything literally. Yeah, so communities are very important.
Everything that's elevated my trading has come from a community.
Yeah.
All the amazing people that I've met in this industry have come from a trading community.
Yeah.
You cannot just sit without anyone, but you can.
Yeah, you can.
You can, but
I wouldn't recommend it.
yes, yeah, exactly.
You miss a lot of fun.
Yeah, exactly. And learning what other people are doing and where other people went wrong and the achievements of other people. You have a great community.
Yeah, also. Yeah. Prop firms, that's basically also how you test if the prop firm is legit. You just go to the community, which talk about this. And you can also get motivated, inspired by other traders. But it's not just the prop firm community. There's a lot of just trading communities that are basically built by common traders, regular traders. You just want to chat about trading. This is how you get the news. What's currently hot in the trading industry. Just that's probably the best that happened to me, to actually join few communities, and then I was basically growing the fastest, because sometimes when you're on the learning curve in trading and then you don't have actual idea where to go next, the community could be the great point which directs you to whenever you can go next.
Yeah.
So yeah, it's very important, also helping you understand certain things, discuss ideas, set out. Yeah, communities is one of the things that should be at the top of the list, I would say. Trading nil is boring.
Yeah. But it is isolated.
Yeah,
I said generally.
it can be. It's a not in words. So
Trading space, I've always traded from home. I sort of created a space in my living room at one point because I just needed a big space. So I took my desk, and then there was a kitchen here, and then there was a sofa area here. I put it in there, but having your space clean is so important. Oh yes, it declutters your head, and you can focus on what you need to focus on, which is the chart. So
yeah,
that's probably my most important point for
having a clean room. Yeah, there's nothing. Maybe even the first rule of Jordan's Peterson book, 12 Rules for Life, like clean your room, which is very important. And I think also it's very important. I can't work in a mess, so my office needs to be like precisely organized. Also, it goes with an organized life. You'll have organized trading, so 100% agree to that. Trading environment, yeah, that's important. We talked about economic news. I remember I wrote it down so I can talk about Ken's analysis, because I believe it's important for any trader. We've talked about it, and yeah, that will be probably all from at least the very basics, or not basics, but from the top of the list, what I see the mistakes that traders do and some tips.
So what would you round up as your top 5 things of what makes a successful trader?
First would be the instrument selection, because you come into the market, you don't know what you are trading. If you're a very beginner, you just, you've heard about trading. You should learn one instrument, and whenever you advance, then you should stick to one instrument, or at max 3 if you want more opportunities, or look for opportunities across the market. So that's the instrument. The second was not overtrading, and just give few days breaks to yourself from the screen. Most of the successful traders at the market is doing it, so do it as well. Then do not chase the losing days as well.
Yeah.
So that's important. Highlighted with Michael Lee that just you should not be following the day that you closed in loss another day with a trade, because you will be still emotionally attached to that losing day. And that's we also did the Q&A on Instagram, and most of the answers were that people need to help with the situation when they are in a drawdown, like under the break even, and getting back above it is very hard for every trade.
Funny, there's like specific points of drawdown. It's like the closest to the entry, it's, let's say, yellow. Like in regards to it being danger, it's yellow and then orange, red. And the further you get down to this red, like the deep red, of the maximum loss, is the more stress that you become and probably the more risk that you put in.
Exactly.
So it's about flipping it and staying calm at the red part and calm at the yellow parts at the same point. Otherwise, you don't quickly go this way or quickly go that way.
Yeah, not being emotional in this specific scenario, it's very hard. I mean, when you're already in orange, well, in the yellow, once you open the first trade and that ends up in a loss, already your chances are getting lower that you are turning back. So you feel this emotion.
It's that, isn't it? No, it's exactly that. Your chances of turning it back becomes lower the further you go down, but that's just a belief that you have. For me, I've turned around an like 250 from the maximum loss. I've turned it around to plus 20K on one of my prop firm accounts. It's possible from $100. It's possible from $50. Don't stress. You don't have to do it super quickly. You can just go through a process of getting yourself back out. It doesn't mean you've lost the account if you're in the red zone. So that's,
losses are inevitable at the very end of the day, because everyone, successful trader, the best of the best traders, has losing days.
I'm really glad you brought that up.
I cannot avoid it.
Yeah.
No one has 100% win rate strategy, right? So it's just the way you deal with it.
And the way that you deal with your losses, if you think your losses are bigger than they actually are, you're going to use that as your, what's the word? Your reasoning of why you should enter the markets now and with a big lot size, or why you can't take a break, or why you're not going to hit your goal. And there's so many things psychologically that come from that you need to just put it on mute and focus on what you need to focus on.
Exactly. This is why I think that the trading plan is actually handy, because you should forget about emotions. Most of the very successful traders, they say that the less emotional you get, the better trader you are. The more like a robot you get, the better trader you are, because if you separate yourself from emotions, your chances of doing a rational decision are lower. So you will be more logical whenever it comes to decision taking, and even though you are in a losing trade, you can deal with it better. And I think I'm looking forward for JV. I would like to brought it up now, because what we are going to launch at the market is the trading performance. Basically, trading psychiatrist. Can I say that? I think so. Yeah. So he's going to help you exactly with days where you are in a losing streak, or you started to do evaluation and you unfortunately closed losing positions. You're now in a drawdown, and this is, at least from what I've heard, the most common mistakes, or how can I call it, that mistake scenario that traders on the
Situation, though. It's
the most common one. So I think we would like to help our traders with, and JV is really good at what he does. So we are going to launch it soon, and hopefully it will have success, because I think the trading psychology, you can learn anything on the internet, like regarding technical analysis, fundamental, different strategies, risk management, but the trading psychology is a very unique factor in trading, and there's such a small amount of studying material or articles, YouTube videos that would actually help you go through it, that I think JV project will be absolutely amazing. I think this is also how we see it in a show called Billions, the Wendy Rhodes helping traders, like trading psychologists. And also, did you know, I found out recently that the Wendy Rhodes is actually based on a actual woman who did it for a company of traders.
No way.
Yeah.
Wow.
Yeah, so something like that is what you need when you're in a losing position. There were a couple of scenes where traders in the Billions is still a series, but were in a losing position and she helped them. Yeah.
It's very difficult for someone to sometimes look in themselves without talking or bringing it up.
Yeah.
What is the things I'm struggling with? What are the patterns that I'm doing? Why do I feel this when I make a losing position? I think JV will be the person to bring that up out of you. He is very good at self-reflecting and then making sure that you are able to understand yourself. Why do you do these things?
Yes, exactly. The decision making, also the types of decision that you do, and just so you understand it, why you're doing it. I mean, there's so many topics. I mean, just the first lesson has 28 videos that has each video has 1 hour or something around it, so there's a lot of value in his content, and I'm looking forward to watching myself, because trading psychology is one of the factors that you never stop learning about, as you still deal with different emotions your trading journey. So yeah, it's going to be awesome. I'm looking forward to that. And I've got a couple of points about the trading psychology, but as long as I'm not a trading psychiatrist, I wouldn't get the deep dive into it. So I would leave it on JV in the upcoming months.
Yeah.
And other tips will, or at least I will have, once I'll review even more accounts, because we're still trying to find out what separates these traders.
Yeah, it's a forever ongoing mission to understand what makes a trader good.
Yeah.
And everybody has their own unique abilities. Like you said, you want to morph two traders together. That would be a perfect trader. But yeah, everybody has their strengths and everybody has their weaknesses. It's about finding your weaknesses and making them good.
Exactly. 100% agree. So at least we brought to you a few topics or factors that we believe, from what we review with the really successful trader in the markets, are important factors. Hopefully you will apply it in your trading. Hopefully it will help you become a successful trader. And we'll come later on with more topics, more factors that drive successful traders.
Yeah, guys, if you have any other topics that you want us to talk about, anything you want to go into with the traders, the trader data, the trader statistics, we're here to talk about that and get a better understanding of what you guys want and what you guys want us to talk about.
Yeah. Thank you for being perfect co-host.
Okay, thank you for welcoming me here.
I'll see you next week.
Yes, see you next week.
Take care.